Hello, I'm Isa Tan, welcoming you to another Asian Agribiz podcast. South America plays a huge role in the global corn and soybean markets just by the sheer volume of production. But with some of the weather shifts in the last couple of years, we have seen a lot of volatility in the region's production. To this end, Asian producers are looking at various sources, including the US. My colleague Meliana talks with Mac Marshall, Vice President of Market Intelligence at the United Soybean Board, about how corn and soybean demand trends in the Asian market relate to this year's US crops.
Hi, Meg. It's nice to have you in this podcast.
Hi, Mel. It is great to be here. Thank you so much for having me on.
Before we start, can you please introduce yourself and your company?
Yeah, my name is Mac Marshall, and I am the Vice President of Market Intelligence for the United Soybean Board. A little bit of background on the United Soybean Board. We're also referred to as the Soy Checkoff, and what we do is we represent the nation's soybean farmers. We're a farmer-led organization that invests farmer dollars, or rather reinvests them towards the research, marketing, and promotion for U.S. soy domestically and internationally.
Meg, I'm curious, how is the corn and soybean harvest decision? What can you tell me about crop conditions farmer experience and their yields?
Sure, but maybe first a minute on the river and the weather conditions there. So in the United States this spring, we've had a lot of snowpack in the northern parts of the country, and as that is melting, we've seen a replenishment of the depth of the Mississippi River. Of course, we had a lot of dryness in the fall during harvest and our peak export window, which we were of course able to overcome. But yeah, it's certainly getting replenished now, where a lot of the northern part of the Mississippi River, so northern Illinois on upward, is having restricted traffic and everything due to high water level. Now, at this point in time of the year, this is not a critical shipping time for export of grain and oil seeds out of the United States. That definitely takes place in the fall, really more that September through January timeframe. So it's not really a concern for supplying right now, and it is something that I think will naturally be worked through as we progress through the season, which let's turn to the season. So looking ahead to harvest, naturally we first have to look at planting. And at the end of March, that's when the United States Department of Agriculture issues its first survey-based estimates of farmer planting intentions in its prospective plantings report. And this year, just looking at corn and soybeans, which are the two largest crops we have in the United States, corn area, the intentions report right now saying we will have 92 million acres of corn, and that's about 37.2 million hectares, and 87.5 million acres of soy. That's about 35 million hectares. Soy number, a little surprising because it's basically unchanged from last year. Corn, you've got this real surge forward. I think that's up about 4% relative to last year. So some interesting dynamics there. Fertilizer prices have come down relative to last year, but they still remain very high. I think some of that is factoring into potentially some of that corn acreage. And then, but of course we still have to consider what can unfold in the coming weeks. We've got good pace for planting across the country. Earlier this week, soy planting is close to 20% complete across the U.S. That's ahead of our typical pace. So seeing farmers being able to get in the ground early is definitely exciting. Now, we'll see what the summer has in store for us in terms of weather and what that means for crop productivity. But if we assume normal trend yields in the United States, we would be looking at a record corn crop on the strength of that large area figure, and soy at 87.5 million acres, yield in the low 50s. We'd be looking at a crop around 4.5 billion bushels, about 120 million metric tons thereabouts. So corn, again, just going off acreage and trend yield, would be our largest, and soy would be, certainly one of the top 5 largest crops we ever had, just based on trend yields and area. But of course, there's a lot to unfold between now and then. if we have any delays in corn planting that really push it back, we could see some switch over to soy on some of the marginal acres, because you plant soy later, a couple weeks after corn, typically in many parts of the country, and farmers obviously want to keep their options open. So it'll be an interesting summer to watch, particularly as we're looking to bring a strong soy crop to the market and replenish what some of the losses have been, particularly in South America over this last year, namely Argentina.
How much do you think grain and oilseed production in South America it will affect the world markets?
I'm really glad you brought this up, because I think it's been, not just this season, but really the last couple. I mean, South America plays a huge role in corn and soy markets in any year, just due to the volume of production. But with some of the weather shifts that we've seen in the past couple years, we've seen a lot of volatility in production. So Argentina, for example, has just gone through a third consecutive year of La Nina, which, it didn't hamstring its crop too much in years past. We did see losses in Argentina last season, definitely several million tons, but it really paled, and it seemed like a lot at the time, but it really pales in comparison to the foregone productivity that we've seen as a result from dryness in this season. Argentina, for reference, typically produces a crop on the order of about 50 million metric tons. For comparison, say the U.S., we're in that 116 to 120 million metric ton range, at least over the past couple of years. And the latest estimates that come out of the U.S. Department of Agriculture put Argentine production for this marketing year at about 27 million metric tons, although local market observers put it even lower than that. And that's, pretty substantial. You lose on the order of, 20 million metric tons plus out of production. That's substantial. But of course, that is being offset by Brazil. Brazil area under cultivation for soy this last year increased by another 4%. Brazil's been on that trend for a long time, and their crop as it stands now is slightly above 150 million metric tons, which is an absolute record. And for Brazil, that's a significant rebound from a really disastrous crop last year, where they were beset by a lot of dryness and lost about 20 million tons of production, or their final production relative to what was expected. So, you've had kind of different things happening in both of the major producers down there. But all in all, what we've seen here, I think particularly with the drought being concentrated in Argentina, let's remember that Argentina is also the world's largest crusher and exporter of value-added products of soybean meal and soybean oil. So with lower availability of whole beans in Argentina, capacity utilization has been low, and Argentina has looked to source additional beans from Brazil to keep that capacity utilization rate high. So you've seen this impact kind of manifest in meal markets, which have come down in recent weeks, but were as high as $500 a ton in the early part of the year. A large part of that being due to degradation of the Argentine crop and lower availability. Now, capacity utilization for their crushing plants is still relatively low. In the U.S., we run shade over 90%. In Argentina, I think there's about 60% idle capacity this year, when it's usually running at maybe 2/3 of 70%. So that's, I think, pretty relevant for any international meal buyers to think about.
Okay. Mac, especially in Asia, which countries are the main markets for South America, which they use as raw materials for animal feed?
Well, I'd break that down into the markets that are relevant for whole beans and the markets that are relevant for meal. And then, of course, there are hybrid markets as well, where you have, some dedicated crushing assets and capacity, and some where you're just insourcing meal. So first and foremost, China, far and away the world's largest buyer of whole soybeans. The domestic infrastructure there is set up for receipt of imported beans. Brazil is the largest supplier to China now. It surpassed the U.S. Close to a decade ago, again, as Brazil continues to expand its production and its exportable surplus through expanding area. It's not something we have the luxury of doing within the United States. But, that's certainly very relevant. But you also look at some of the other Southeast Asian markets. Indonesia, for example, is a large importer of both whole soybeans and soybean meal. Specific to the U.S., it sources about 2 million tons of soybeans from us and the balance out of Brazil and Argentina. But the vast majority of its meal imports are coming from Argentina. Throughout Southeast Asia, there's increased cost competitiveness for Argentine origin meal relative to U.S. Origin, due to the transport and logistics and in proximity. But this could be an interesting thing that we see evolve in the coming years. In the U.S., we're poised to have a pretty significant expansion of crushing capacity that's in part being driven through expansion of the biofuels programs in the United States. And this naturally means that as we have more crush assets come online and crushers are crushing increasingly for oil, we're going to have a lot more meal availability. So we're seeing a lot of opportunity potentially in the coming years for, markets like Southeast Asia or across Southeast Asia, markets like Indonesia, or expansion of our leading position in the Philippines. We see these as opportunities for buyers to experience, more U.S. origin soy meal in the years to come. So it's very exciting.
How about Thailand, Vietnam, and other countries?
Back in March, I was actually in Jakarta, Indonesia, speaking at a jointly organized conference between USEC, U.S. Wheat Associates, and the U.S. Grains Council. So really showcasing American ag to the region as a whole. And I got to talk with buyers and integrated feed millers from across the region: Indonesia, Philippines, Malaysia, Thailand, Vietnam, Singapore. Lots of interest in soy, particularly as this collective market in Southeast Asia, imports nearly 10 million tons of whole soybeans annually, about 18 million tons of soybean meal annually, and I think is poised for growth in the years to come. We've seen a lot of dietary ascension and transition there, which has led to more downstream livestock production and, of course, a burgeoning aquaculture sector, and all of that is going to require more soy in the years to come to help support it. So, from a U.S. perspective, breaking down some of those markets, the Philippines has, long been our number one overall overseas meal destination. We export about 2 million tons there annually. But if we look across the region, it gets a little more interesting. Indonesia, for example, they import as a country roughly about 2 million tons of whole beans just from the United States, a couple 100,000 tons from other origins, namely Brazil. But if you think and look at other countries like Thailand, Vietnam, Malaysia, these are all areas where we might be underserved on the meal side. Thailand imports about 3 million tons of both whole beans and meal. Vietnam and Malaysia are much heavier on the meal side. And while we do send some meal to these countries, they're predominantly sourcing from Argentina as the world's largest meal exporter. Now, some of that is due to cost differential, but in the years to come, as the U.S. looks to be producing more and more meal with our crush expansion, we see a lot of opportunities for market expansion around the world, but really acutely into Southeast Asia. We've got an investment in expanding an export terminal, which I think will set us up very nicely to bring more meal to Southeast Asia as a whole in the years to come.
Nice. The next question: what is your outlook for the longer term on grain costs? Will they stay high? Is there a certain point where you see them coming down and or stabilizing?
Well, as I think about this, I'm reminded of a market adage, which is that the cure for high prices is high prices. And you certainly see that in grain and oilseed commodity markets. We've not seen quite that response yet in the input side of the equation. I'm thinking of a conversation I had with a farmer in fall of 2021. They said, did you see the price of anhydrous ammonia? I said, yeah, it's $1,200 a ton. And this is a time when farmers are used to paying, just a couple $100 a ton. And she said, no, actually, that was last week. Now it's $1,400 a ton. Well, we've seen, significant retreat from those levels, but we're still at price levels that are higher than, what farmers have been used to in the, kind of pre-2021 and certainly pre-Black Sea conflict timeframe. So, for corn production, fertilizer is absolutely the most costly input. It's a very necessary part of production to maintain that soil fertility. And I think, as we've seen some significant easing, that's important. But let's remember that a lot of fertilizer production is concentrated in the Black Sea. I think it's also worth recognizing that different countries have a different import reliance for fertilizer. Brazil, for example, is about 90% reliant on imported fertilizers. In the United States, we actually produce about 90% of what we need, and we backfill potash primarily with imports from Canada. So even as U.S. farming has been relatively resilient in the face of higher fertilizer costs, just as one example, we've still seen higher costs just because it is a commoditized market too. So, longer term, the hope is certainly that as we get through some of these geopolitical conflicts and some of the, trade or abnormalities that we've seen in the COVID and post-COVID period, as some of the supply chain disruptions, continue to unwind, certainly we hope that those costs of production come down, because farmers have also seen it on chemistry as well as machinery and parts, and of course let's not forget financing. I think one thing that maybe is underappreciated generally is just how expensive it is to run a farming operation, how much capital equipment you have to buy, how much debt you have to incur to set up and then continue to run your operation. So in an elevated interest rate environment, that's certainly a major concern among farmers for financing and producing their operations.
Meg, in your opinion, what factors regarding grain and oilseed supply should animal feed producers keep an eye on this year?
Well, I think, not to be overly obvious, but certainly the supply and demand levels are going to be really relevant. Any year you want to be watching the production in the major producing countries, and now all eyes are on the U.S. for the next several months as our farmers look to bring home another great harvest. So the volumes of production that are happening in the United States, and then as we go into next year and think about production coming out of South America, that's naturally going to play a key role in determining overall price levels. But I think it's also worth noting that, price is not the only determining factor in how you choose sourcing or how you think about what's going to be best for your operation. You have to think about efficiency of your operation. You have to think about animal performance, or how a feed is going to perform in an animal with meal from one origin versus another. So these are the sorts of things that our team at USEC in particular, that's the United States Soybean Export Council, is really, I think, doing a fantastic job of around the world, is showcasing through its nutrition value calculator some of the attributes of U.S. origin meal or meal crush from U.S. origin beans, and what that can mean for animal producers around the world. So I think, in addition to just that sticker price, which may be the first point of focus, I encourage animal feed producers to look beyond that as well, and consider the performance attributes also. Another thing that I think bears mention, and this came up at a conference I was at last month in Indonesia, talking to a couple buyers, is as Argentina this year is having to backfill a lot of the beans that would be going through its crush facilities, is having to backfill that with Brazilian beans, where there may be some damage and stress and everything. There's what does that mean for the consistency of the specification? This is not something I had really considered until I heard it from a buyer at this conference, is that, hey, we're used to a certain specification of meal, but if you're shifting around the origins and the sourcing, am I still going to get that consistency? So I think looking for that is going to be really critical. And again, keeping in mind animal performance and all those downstream attributes, maybe rather than just the sticker and landed cost.
Interesting. Anything else you want to add, Meg?
Well, first, I really encourage all listeners to come check out our website, see the work that the checkoff is doing. That's at unitedsoybean.org. But, since this is an international audience and, you all are naturally interested in the value of U.S. soy and learning more about it for importation, check out USSEC's website. That's ussec.org. You can take a look at those nutrition value calculators that I mentioned, play around with it, see what might be best optimized for your operation. And, U.S. Soy remains committed and standing by to continue to be that supplier of choice to the world. So please check out unitedsoybean.org, see the checkoff initiatives, and usec.org for the continuing information that is really geared towards an international audience.
It's great. Thank you so much for taking the time to talk with me today, Meg. I hope that our listeners take some valuable information from this episode.
Well, that's always my hope too. This was a lot of fun. Thank you for having me on, and I couldn't echo that more. I hope all of you who are listening enjoyed this, and good luck with purchasing season and beyond. Thank you.
I hope that you take some valuable information from this episode. Thank you for listening in. Don't forget to subscribe to this channel on Spotify, Apple Music, or wherever you get your podcasts. For more on the Asian animal protein industry, please visit www.asian-agribiz.com.